We're starting to hear the drumbeat around a potential recession for the U.S. economy get louder and louder. CEOs like Jamie Dimon and Larry Fink have been talking about the possibility. More and more economists are predicting it. Our readers think we might be headed towards a recession. So let's get our economic downturn terms straight in case we are headed into a recession. Right now, I would say we are in what we call stagflation. That is a stagnant or slowing economy, rising prices, inflation due to tariffs, and rising unemployment. Not a great recipe for the stock market. As you know, we are down in a correction right now, down 10% or more from recent highs. And then there's a recession. That is a significant downturn in economic activity that can last for several months, could last for a couple of years. And we look at things like slower consumer spending, slower business spending, lower manufacturing, rising unemployment, and deflation as demand disappears from the marketplace. Not great for the stock market. The last big recession we had was in 2008 in the great financial crisis. It cut the stock market in half. We had a quick one right around COVID, but it only lasted several months. And then there's a depression, the worst possible case, where it's a significant decline across all economic activity. You see rising and spiking unemployment, higher bankruptcies, rising foreclosures, a higher poverty rate, and it's devastating for the stock market and can last several years, even a decade. The last big one we had was during the Great Depression.